Okay, quick show of hands. If your hand were visible right now, which it isn't because this is a podcast, how many of you got a message in the last month that said something like, we need to figure out our actual AI spend? Yeah, that's basically everyone. Welcome back to the show. Today we're talking about something I'm calling the post-free world. For about 2 years, a lot of companies have been experimenting with AI in a kind of sandbox mode. Free tiers, generous credits. Let's just see what it can do energy. That era is ending. And what's replacing it is a lot less forgiving. Real per token costs, real infrastructure decisions, and a very real question from finance. What did we get for this? So today we're doing a full reality check. We're going to talk about the actual cost of AI, not the sticker price, the total cost. We're going to talk about why simpler, boring, deterministic code is often the better answer. We're going to talk about why humans aren't just a fallback when AI fails. They're often the smarter choice from the start. And we're going to end with a framework, a decision matrix that you can actually use this week to audit your own workflows. Let's get into it. Let's start with where most companies are right now, because I think there's a pattern, and it's a pattern that's about to get expensive. For the last couple of years, the dominant mode has been experimentation. You spin up a pilot. Someone on the team gets access to an API, maybe through a free credit program, maybe through a startup deal, maybe just through a generous corporate plan. And the mandate is basically go play, see what sticks. And that's fine. That's actually a healthy phase. You want to explore. You want your team building intuition for what these models can and can't do. And here's the thing. That phase has an expiration date, and a lot of organizations are hitting it right now in 2026 without quite realizing it. The pivot is from AI experimentation to AI operations, and those are fundamentally different modes with fundamentally different economics. In experimentation mode, the question is this possible? In operations mode, the question is this profitable at scale forever? Those are not the same question. Something can be possible and still be a terrible idea to run in production for the next 5 years. So let's talk about the sticker shock, because this is where a lot of teams are getting their wake-up call. During the experimentation phase, AI felt, for a lack of a better word, free, or close enough to free that nobody was tracking it carefully. You had a flat subscription, maybe $20 a month, maybe an enterprise contract with a big bucket of included usage. The cost was basically fixed, predictable, and small enough that nobody put it on a dashboard. Now flip to operations mode. You're not paying a flat fee anymore. You're paying per token. Every input token, every output token, every API call scales with your volume. And here's the kicker. The things that make AI useful, long context windows, detailed outputs, multi-step reasoning, tool calls, agents that loop and retry, those are exactly the things that multiply your token consumption. So you take a workflow that worked great in the pilot, say processing 50 customer support tickets a day, and you scale it to 50,000 tickets a day. In the pilot, the cost was invisible. At 50,000 a day, multiplied by however many tokens each ticket consumes, multiplied by retries when the model gets something wrong, multiplied by the context you're feeding it each time, suddenly there's a line item, and it's not small. This is the sticker shock. It's not that AI got more expensive. It's that the cost structure was always variable, and you just weren't looking at it closely enough to notice, because the absolute numbers were small. Now the absolute numbers are large, and finance is asking questions. And that brings us to what I think is the central theme of this whole episode, the ROI gap. Here's the strategy a lot of companies adopted, often without explicitly deciding to. AI for everything. If there's a task, throw an LLM at it. Customer emails? LLM. Internal documentation search? LLM. Data entry? LLM. Scheduling? LLM. Code review? LLM. It became the default tool almost reflexively because it was available and it was flexible. And during the experimentation phase, it was cheap enough not to matter. The problem is that AI for everything is a fragile strategy for a very simple reason. Not all tasks have the same economics. Some tasks are genuinely hard. ambiguous inputs, judgment calls, creative synthesis, reasoning over messy, unstructured information. For those tasks, AI can be transformative, and the cost is justified because the alternative, human time, or just not doing the task at all, is more expensive. But a huge number of tasks that got routed to AI during the experimentation phase are not actually hard in that sense. They're tasks that are hard because the input is messy, not because the underlying logic is complex. And when you route those tasks to AI, you're paying premium variable per token costs to solve a problem that, as we'll get into later in this episode, could often be solved for nearly zero cost with a different approach entirely. So the ROI gap is this. The value AI provides on the genuinely hard tasks is real and often substantial, but that value gets diluted, sometimes completely erased, when you average it across all the tasks you've pointed AI at, including the easy ones that are now costing you real money for no good reason. And in a flat fee world, that dilution didn't matter because the marginal cost of the easy tasks was zero. In a per token world, it matters a lot. So that's the setup. The pivot from experimentation to operations exposed a cost structure that was always there but never visible. And that exposure is forcing a question that, frankly, should have been asked from day one. For this specific task, is AI actually the right tool? Or is it just the tool that happened to be sitting on the workbench? In the next segment, we're going to get concrete about how to actually calculate that. Because is AI worth it isn't a vibes question, it's a math question. And the math is more involved than just looking at your API bill. Stick around. All right, let's get into the numbers. And I want to be upfront. This segment is going to feel a little like an accounting lecture. That's intentional, because I think the single biggest mistake companies make right now is looking at their API bill and treating that number as the cost of AI. It's not. It's one line in a much bigger ledger. Let's talk about the total cost of ownership, TCO. This is a concept that's well worn in traditional software and infrastructure, but it's strangely absent from a lot of AI conversations, probably because AI still has this aura of being new and different. So people forget to apply the same rigor they'd apply to, say, deciding whether to build or buy a piece of software. So what goes into AI TCO beyond the API bill? First, prompt engineering and ongoing maintenance. Here's something that doesn't get talked about enough. Prompts are not set it and forget it. They're more like code. They need versioning, they need testing, they drift in performance when the underlying model gets updated, and models do get updated, sometimes in ways that change behavior subtly. Someone on your team is going to need to monitor that, tweak the prompt, retest it, redeploy it. That's engineering time. That's a salary. That's a cost. And it's not a one-time cost. It's ongoing. Every workflow you've built on AI is a workflow that needs maintenance, the same way any piece of software does. Except unlike traditional software, where the logic is explicit and you can trace exactly why something broke, debugging a prompt that started behaving differently is often more like detective work. That takes longer. That costs more. Second, and this is the one I really want to dig into, what I call the hidden liability tax. This is the cost of AI hallucinations. And I don't mean that abstractly. I mean very concretely. When an AI model confidently produces something that's wrong, what does that wrongness cost you? Sometimes it's small. The AI mislabels a support ticket. A human notices. It gets rerouted. You've lost a few minutes. Fine. But sometimes it's not small. The AI generates a customer-facing email with an incorrect policy detail. The AI summarizes a legal document and drops a critical clause. The AI gives a customer a refund amount that's wrong. The AI cites a source that doesn't exist in a report someone presents to a client. Each of those has a cost, and that cost isn't on your API bill. It shows up as customer churn, brand damage, the time spent on the support call to fix the mistake. In serious cases, legal exposure. The hidden liability tax is essentially probability of a hallucination occurring times cost when it does occur times volume of tasks. And here's why it's hidden. Most companies don't measure this at all. They measure the cost of running the AI, but not the cost of the AI being wrong. And for any task running at meaningful volume, even a small error rate multiplied across thousands of instances adds up to a real number, sometimes a number that dwarfs the API bill itself. So when you put it together, API costs plus prompt engineering and maintenance labor, plus the hidden liability tax from hallucinations, you start to get something closer to the real cost of an AI-powered workflow. And that number is almost always higher, often substantially higher, than what shows up on the API invoice. Now let's talk about the second big piece of this segment, unit economics. Here's the exercise I'd encourage every team to do, and it's not complicated. It's just rarely done with discipline. For any task that AI is currently doing, calculate the fully loaded cost per task resolution, not cost per API call, cost per completed task, including retries, including review time, including the liability tax we just talked about. Then calculate the cost of a human doing that same task, their loaded labor rate, salary plus benefits plus overhead, divided by how many of those tasks they can complete in an hour. Now compare the two numbers, honestly, without the thumb on the scale that says, but AI is the future, so it's worth it, even if it's more expensive right now. Sometimes AI wins this comparison decisively. And in those cases, great. That's exactly where AI should be deployed. But sometimes, and this is the uncomfortable part, the human number is actually lower once you account for everything. Not because humans are cheap, but because the AI version of the task involves more steps than people initially budgeted for. The AI does the work, then someone reviews it, then sometimes someone corrects it. Then occasionally, something slips through and causes a downstream problem that someone else has to clean up later. When you add all that up and divide by the number of tasks completed, the cheap scalable AI option can quietly become the more expensive option. And the only way to know for any given task is to actually run the math, not estimate it, run it with real numbers from your real operations. That's the foundation. In the next segment, we're going to build on this by talking about something that I think is genuinely the most underrated lever in this whole conversation, the architecture of your inputs. Because a huge amount of AI cost and a huge amount of the hidden liability tax comes not from the task itself, but from the mess the AI is being asked to wade through before it can even start the task. Okay, this is the segment I've been most looking forward to, because I think this is where the real aha moment happens for most teams. Let's start with what I'm calling the simplify first mandate. And the core idea is deceptively simple. Before you apply AI to a complex or unstructured data problem, ask yourself, can I restructure the input instead? This sounds almost too obvious to be worth saying, but I want to walk through why so many teams skip this question entirely and what it costs them when they do. Let's use a concrete example. I'm going to call this the email fallacy because I think it's the single most common pattern I see. Here's the scenario. A company has a customer support inbox. Customers email in with all kinds of requests, billing issues, technical problems, complaints, account changes, you name it. And these emails are, to put it gently, unstructured. Some are one line. Some are 3 paragraphs of someone venting about a bad day with the actual request buried somewhere in the middle, sometimes contradicted by something they say 2 sentences later. Some include screenshots. Some are replies to replies to replies with 5 layers of quoted text. The natural feeling solution in 2026 is let's have an LLM read these emails, figure out what the customer wants, extract the key information, and route it appropriately, or even draft a response. And technically, that works. LLMs are very good at parsing messy, ambiguous text and extracting structure from it. That's genuinely one of their superpowers. But here's the question nobody asked. Why is the input messy in the first place? The answer is because you let it be. You built or inherited a system where the entry point to your support process is send us an email about anything in any format with any amount of context or lack thereof. That's a design choice. And it's a design choice that in the experimentation era felt totally fine because, hey, we've got AI now. AI can handle messy inputs. But think about what's actually happening economically. Every single one of those emails, no matter how simple the underlying request actually is, now requires an LLM call to parse it. An angry 3-paragraph email about a billing issue and a polite 1-line email about the exact same billing issue cost roughly the same to process, and both cost more than zero when zero was achievable. So what's the alternative? The alternative is don't fix the mess with AI. Prevent the mess from happening. Instead of email us anything, what if the entry point is a structured web form? What's this about? Drop down with options like billing, technical issue, account change, other. What's your account number? A field that validates the format as they type. Describe the issue. A text box, sure. But now it's one specific thing in the context of a category that's already been selected, attached to an account that's already been verified. Now, when that request comes into your system, you already know with 100% certainty, no parsing required, what category it's in, what account it relates to, and roughly what the customer needs. The understanding step that used to require an LLM call has been moved upstream into the design of the input itself, and it costs nothing per instance because it's just a form. Does this mean you never need AI in support? No, there will still be genuinely complex cases, edge cases, situations that don't fit neatly into the categories you defined. Those are great candidates for AI because that's where AI's actual strength, reasoning over ambiguity, is being used for ambiguity that's real, not ambiguity that you accidentally manufactured by not having a form. This is the core insight. The messiness of an input is often a choice your system made, not an inherent property of the problem. And if it's a choice, you can choose differently. And when you do, the AI cost for that part of the workflow doesn't go down. It goes to zero because there's nothing left for the AI to do. Let's broaden this out because the email example is just one instance of a more general principle. The case for traditional programming. Here's a test I'd encourage every team to run on any workflow they're considering automating with AI. Can you draw this process as a flowchart? If the answer is yes, if you can sit down and sketch out if this, then that, if that condition is met, do this other thing, otherwise escalate, then what you have is not an AI problem. What you have is a logic problem. And logic problems have been solved very well for decades by something called code. I think there's a kind of a psychological pull toward AI right now where it feels like the modern solution, the impressive solution, the one that signals you're keeping up. And writing a boring if-else chain feels almost embarrassing by comparison. But that instinct is exactly backwards from an ROI perspective. If your process is check if the order total is over $500, and if so, check if the customer has a return history flag, and if so, route to manual review, otherwise auto-approve, that is not a job for a language model. That is 15 lines of code that a junior developer could write in an afternoon that will run in milliseconds, that will cost essentially nothing to execute, and that will produce the same exact output every single time, given the same input. Which brings us to what I think is one of the most important and most underrated points in this entire episode, the consistency advantage. Deterministic code, by which I mean regular expressions, standard conditional logic, traditional rule-based systems, has 3 properties that are, frankly, kind of remarkable when you compare them to AI, and that almost never get talked about because they're so unglamorous. Property 1, 100% reliability. Given the same input, deterministic code produces the same output every single time, forever. There's no, it usually gets this right. It either handles the case correctly because you coded that case, or it doesn't handle it and falls through to a default, predictably. Property 2, zero hallucinations. This one almost sounds silly to say out loud, but it's worth saying explicitly. Code does not make things up. A regex either matches a pattern or it doesn't. It will never confidently return a plausible sounding wrong answer. The entire category of hidden liability tax that we discussed in segment 2, that category simply doesn't exist for deterministic logic. Not is reduced, it doesn't exist. Property 3, near zero cost. Once written, a piece of deterministic code costs essentially nothing to run, regardless of volume. 1 million invocations cost roughly what one invocation costs. Basically the price of some compute cycles, which at this point is a rounding error. There's no per token meter running. There's no marginal cost that scales with usage any way that matters. Now, I want to be careful here because I don't want this to come across as AI bad, code good in some simplistic way. That's not the point. The point is that these are different tools with different cost profiles, and the cost profile of deterministic code is, for a huge category of business problems, dramatically better than the cost profile of AI. And that category is larger than most companies realize, precisely because the experimentation era trained everyone to reach for AI first, by default, without asking whether the problem actually required it. The simplify first mandate isn't about avoiding AI. It's about sequencing your tools correctly. Structure the input if you can. Apply deterministic logic if the process is mappable. And reserve AI with its real, ongoing, per token, liability-bearing cost for the cases that actually need what AI uniquely provides. Reasoning over genuine ambiguity. Synthesis across disparate information. Judgment calls that can't reduce to a flowchart. When you sequence it that way, something interesting happens to your AI bill. It doesn't necessarily go to zero, but it gets concentrated. Concentrated on exactly the tasks where AI is earning its cost. And that concentration is what makes the ROI math in segment 2 actually come out favorable, instead of getting diluted across 1,000 tasks that never needed AI in the first place. All right, we've talked about structured inputs. We've talked about deterministic code. There's one more piece of this puzzle, and it's arguably the most important one, because it's about something code can't do at all, and AI can't really do either. Not authentically. That's coming up next, after a quick break.
We talk a lot on this show about how
Welcome
technology
back.
should serve
So
humans,
far, we've been
not
making a
replace them.
case that's
That's
mostly
why
about
I'm so excited
removing
to share
AI
that
from
I've
places
partnered
it
with
shouldn't be,
IRA.
replacing it
IRA,
with structured inputs,
AIRA,
replacing
is
it
an
with deterministic
AI-powered
code.
customer
Now, I want
communication
to talk about
tool
the
that
third
actually
leg of
aligns
that
with the
stool,
values we discuss
humans.
here at
And
Automate Office
specifically,
Work.
why
And here's
humans
the best
aren't
part.
just what you
IRA
fall back
doesn't
to when
write your
AI
emails for
isn't
you.
good enough
It
yet.
doesn't hunt down
They're
cold
often the
leads to
correct,
spam people.
permanent choice for
Instead, it
certain
focuses on the
categories of
most
work,
valuable
for
asset
reasons
you
that have
already
nothing
have,
to do with
your
current
existing
model capability,
relationships.
and
It
everything to
removes
do
the
with the
drudgery of
fundamental
tracking
nature of
so
the
you can
task.
focus on the joy
Let's start with
of
what I'll
connecting.
call the
I
accountability
saw the need
threshold.
for this in my own
There
life.
are
I don't
domains,
need thousands of
legal,
new
medical,
contacts. I need to
high-stakes
stay close
financial
to the
decisions,
thousands of
where the
amazing
question
people
isn't
I
just,
already know.
was the
I
output
used to run a
correct?
complex
It's,
manual system,
who's
tracking
responsible
when
if
I
it
last
wasn't?
spoke to a
Think
partner
about what that
and
means
setting alerts
practically.
for when
If
to
an
reach out
AI
again.
system gives a
It was a
piece of
commitment
financial
to make
advice that
sure my
turns out to be wrong
relationships
and a
didn't just
customer
fade
loses
away
money,
into the
who's
noise.
accountable?
IRA takes
The
that
company
intention and
deployed the
gives it
system.
superpowers.
So
It
legally,
connects to your
presumably, the
contacts and
company.
sends you
But within the
reports when their
company,
companies
there's
show up in
no
the news.
individual who
It gives you the
exercised judgment
signal,
and
the
can be
important
held
life
to that
events
judgment.
and business
There's no
updates.
one who can
So when
say,
you
I
do reach
reviewed
out,
this,
you're
I take
genuinely
responsibility
informed
for
about
this
what
decision.
matters to them.
The
It's
accountability gets
available now in 14
diffuse.
countries across Europe
It
for
sort of dissolves
149
into
euros a
the
month.
system.
It's AI
Compare
done
that to a
right,
licensed
handling the
financial
admin so you
advisor,
can be
a
more human.
doctor, a
If
lawyer.
you want to
Part
support
of what
this
you're
show and
paying
strengthen
for,
your own network,
and this is a
head
real
to
economically meaningful thing, even though it's intangible, is that a
get.ira.app/automate.
specific,
Using that link helps
identifiable,
support my work
accountable
here,
human
and
has
I
put their
truly
judgment,
believe it will
their
help you
license,
lead a
their
more
professional
intentional,
reputation
connected
behind this
professional life.
decision. That's
Now
not
let's
just
get
a
back to the show.
feel-good notion. It's a risk transfer mechanism. It's why malpractice insurance exists. It's why licensing boards exist. The entire structure of accountability in these high-stakes domains is built around the assumption that a human is the final checkpoint. AI doesn't have a license to lose. AI doesn't have a reputation that suffers. AI can't be sued in any meaningful sense. Can't testify, can't say, yes, I made this call and I stand behind it. When the stakes are high enough, legal liability, someone's health, someone's life savings, that accountability gap isn't a minor detail. It's often the whole point of having a human in that role. Second piece, relationship economics. This one's a bit softer to articulate, but I think it's just as real. Think about the customer-facing roles in any business that actually depend on trust, not transactional trust. I trust this app won't crash, but relational trust. I trust this person has my back, understands my situation, and is on my side. A good account manager, a good therapist, a good teacher, a good salesperson, even the kind that builds a real relationship with a client over years, not the kind running a script. Here's the thing about AI and empathy. AI can simulate empathetic language extremely well. It can produce a response that sounds caring, that uses the right words, that mirrors the emotional tone of what someone said. That's a real capability, and it's improved enormously. But there's a difference between simulating empathy and having it. And I'd argue that difference is perceptible, even if people can't always articulate why. When a customer who's genuinely upset about a serious billing error, about a service failure that affected their business, about something that actually matters to them, interacts with something that simulates understanding, there's often a subtle but real sense that something's missing. Not because the words were wrong, but because there's no one on the other side who's actually invested in the outcome the way a human relationship implies. Relationships, real relationships, the kind that drive retention, loyalty, referrals, are built on a kind of mutual stake. The human on the other end has something to lose if this goes badly. Their reputation with this client, their commission, their sense of having done their job well. AI doesn't have that stake. It can produce stake-shaped language. It doesn't have skin in the game. For transactional interactions, what's my account balance? Reset my password. None of this matters. Nobody needs relational trust to reset a password. But for the relationships that actually drive long-term value in a business, the ones where someone stays a customer for 10 years because they trust the people they deal with, that's a human premium that AI doesn't replace. It can support it. It can't be it. And now the third piece. And I think this is the one that ties everything in this episode together, because it's the most directly economic of the three: the human in the loop reality. Here's a pattern that I think incredibly common and incredibly underexamined. A company deploys AI to do some task, drafting documents, processing claims, generating reports, whatever it is. And because everyone knows AI can make mistakes, they build in a human in the loop, a person who reviews the AI's output before it goes out the door. This feels responsible. It feels like best practice. We're not just blindly trusting the AI. We have a human checking it. But here's the question that almost never gets asked. How long does it take the human to review the AI's output? And how does that compare to how long it would take that same human to just do the task themselves? Reviewing someone else's work, or something else's work, is not free. In some cases, it's actually harder and slower than doing the work yourself, because you have to first understand what was done, check it against what should have been done, and then, if something's wrong, figure out what's wrong and either fix it or send it back. That's 3 cognitive steps: comprehend, evaluate, correct. Doing the task yourself is 1 step. Do it. So picture the math. The AI takes some output and produces a draft in, say, 10 seconds. The human then spends 8 minutes reviewing it, catches 2 errors, fixes them, approves it. Total time, roughly 8 minutes, plus AI cost, plus the cognitive overhead of context switching into reviewer mode. Now picture the same human with the same expertise, just doing this task from scratch. Maybe that takes them 6 minutes, because they're not fighting against someone else's or something else's draft. They're not second guessing whether a particular phrase reflects an error or an intentional choice. They're just doing the thing the way they know how to do it. In that scenario, and this happens more often than people expect, the AI didn't save time. It cost time. The human in the loop wasn't a safety net that made the AI viable. It was a tax that made the AI a net negative, while looking like responsible practice. This is why, when you're building an ROI calculator, and I really want to emphasize this, you cannot just compare AI cost versus human cost for doing the task. You have to include a third column: human cost for reviewing the AI's output. And if that third column on its own is comparable to or greater than what the human cost would have been to just do the task, the AI isn't an asset in that workflow. It's a cost center wearing an asset's clothing. So to bring segment 4 together, humans aren't the fallback for when AI isn't good enough yet. For tasks that require accountability, someone who can own a decision and bear its consequences. For tasks that depend on relational trust, someone with a genuine stake in the outcome. And for tasks where the review overhead of checking AI work exceeds the cost of just doing the work, humans aren't a stopgap. They're the correct permanent choice on the merits, on the economics. Okay, we've covered a lot of ground. The cost reality check, the total cost of ownership and unit economics, structured inputs and deterministic code, and now the human premium. Let's bring it all together into something you can actually use. If you've made it this far, you're probably getting benefit from what I have to share. You might even be thinking about sharing this with colleagues or having a conversation with your team. If you're feeling generous and would like to give back to support me in my efforts, you can do so at buymeacoffee.com/automateoffice. Donations can be one-time or recurring in any amount that you would like, and show me that you appreciate the content I provide. All right, everything we've talked about today collapses into a pretty simple hierarchy. I'm calling it the tool filter. And the idea is for any task or workflow in your business, you run it through this filter in this order, and you stop at the first level that actually solves the problem. You do not default to the bottom of the list. Level 1, structure the input. Before anything else, can this come in through a form, an API, a structured field, rather than free text or an unstructured document? If you can move the understanding burden upstream onto the design of how information enters your system, you eliminate the need for anything downstream to interpret it. This is the cheapest fix, and it's cheap forever, because it's a one-time design cost rather than a per instance cost. Level 2, apply deterministic code. If the input is structured, or you've just structured it via level 1, can the logic be expressed as rules? If you can flowchart it, code it. Regex, conditionals, standard business logic, 100% consistent, zero hallucination risk, and the marginal cost per execution is effectively nothing. Level 3, deploy humans. For anything that requires accountability, someone who can own a decision or a relational trust, someone with genuine stake in an outcome, or where the review cost of AI output would exceed the cost of direct human work, a human does the task, not as a fallback, as the correct tool for that job. Level 4, use AI. And this is the last resort, not because AI is bad, but because it's the most expensive, most variable, and only category in this list with a built-in liability tax. Use it for what's left, tasks that are genuinely complex, genuinely unstructured, requiring genuine reasoning over genuine ambiguity, where levels 1 through 3 have been tried and don't apply. Notice what this hierarchy does. It doesn't tell you don't use AI. It tells you where AI's cost and risk profile is actually worth it, which is exactly the set of problems AI is uniquely good at, and exactly the set where the ROI math from segment 2 tends to come out positive, because you're not diluting AI's value across 1,000 tasks that never needed it. So here's your action plan, and I want to make this concrete, not just inspirational. This week, not sometime, this week, pick 3 workflows in your business that currently use AI. For each one, ask the tool filter questions in order. Could the input have been structured instead? Is there a flowchart hiding in this process? There's just been that's just been coded as a prompt instead of as logic. Is this a task where accountability or relationship matters more than raw output quality? And critically, if a human is reviewing the AI's output right now, how does that review time compare to the time it would take that human to just do it themselves? If you find a workflow where the honest answer to any of these questions points away from AI, that's not a failure. That's a workflow where you've been using what I'd call an AI sledgehammer on a problem that a deterministic nail would solve better, faster, and at a fraction of the cost. And I want to leave you with the bigger strategic frame here, because I think it's the thing that'll matter most over the next few years. The smartest engineering move in 2026 isn't to build a more complex AI system. It's to build a simpler business. Restrict the input, not the output. The most expensive AI applications are the ones trying to make sense of everything. Raw, messy, unstructured feeds. Instead, force structure upstream, and the need for AI reasoning downstream often disappears entirely. Audit your AI overhead specifically for this pattern. Are you paying AI to clean up messy data that you chose to let into your system in the first place? Because if so, that's not an AI cost, that's a complexity tax. And AI is just the mechanism you're using to pay for it. Simplify the ingestion, and that cost doesn't get optimized. It goes away. And finally, when you build your ROI calculator, don't forget the human in the loop column. If a human reviewing AI output could have just done the task more accurately in the same time, the AI isn't an asset, it's a cost center. So here's the question I want to leave you with, and genuinely sit with this one. because I think the answer is more uncomfortable than it first appears for most businesses. Given everything we've talked about today, this shift towards structured inputs, towards simplifying before automating, are there specific processes in your business where, if you're honest, the messiness of the input was actually the main reason you felt like you needed AI in the first place? Not because the underlying task was complex, but because the input was a mess, and AI was the tool that could tolerate the mess. If that's true for any of your workflows, that's not an AI problem. That's a design problem wearing an AI costume. And it might be the cheapest fix you make all year. That's our episode. Thanks for listening to Automate Office Work. And until next time, happy automating.